On the autumn of 1929, the global economy violently dismantled itself. Grown men wept in the streets, family fortunes vanished overnight, and Wall Street brokers were sweating through their tailored suits with the heart rate of a hummingbird on espresso. The financial world was quite literally burning to the ground. Telephones were screaming. Ticker tape machines were jamming. People were panicking with a level of pure, unadulterated fear that you usually only see in prey animals. Meanwhile, a few blocks away, one man was sitting in a perfectly quiet, overly expensive leather chair. He was not shouting at a terrified broker over the telephone. He was not frantically drawing lines on a piece of paper. He was not sweating. He was just sitting there, completely still, doing absolutely nothing. By the time the dust of the crash finally settled, that man, Jesse Livermore, had quietly made the modern equivalent of $1.5 billion. He won the greatest financial panic in human history by simply refusing to participate in the noise. This creates a rather massive problem for the modern beginner trader. We are culturally trained from birth to believe that money is the direct, undeniable result of physical and mental exhaustion. If you want a promotion at the office, you work late. If you want to build a house, you lift heavy wood until your back hurts. If you want a good grade, you study until your eyes cross. This makes perfect sense in the physical world. Effort equals reward. Sweating is profitable. So, when a normal, hardworking, highly logical person decides to try their hand at the financial markets, they naturally apply this exact same blue-collar logic. They treat the market like a construction site. They wake up at 4 in the morning, they drink terrible bitter coffee. They stare at 6 monitors flashing red and green lights like a Christmas tree wired by a lunatic. They read financial news that is already 12 hours out of date. They draw 62 lines on a chart until it looks like a geometry exam failed by a psychopath. They click buy, they click sell, they stress. They grind, they try to physically wrestle money out of the screen through pure, undeniable work ethic, and they go completely broke. The work ethic was perfect. The application was financial suicide. I know this is true because I did not just guess. When I worked as a data analyst for a prop firm, I had unrestricted access to the back-end servers. I analyzed the raw data of thousands of traders to find the exact mathematical difference between the 1% who actually get huge payouts and the 99% who burn their accounts to the ground. I took that classified data and put it into a short book. It gives you the uncomfortable truth. It shows you the exact metrics of the top 4,000 funded traders, their win rates, their risk limits, and exactly how long they sit in a trade. More importantly, it gives you the mechanical, step-by-step rules they use to physically force patience and stop overtrading. If you want the exact survival guide the 1% use to survive the market, the link to the book is in the description. Read it and mechanize your mind. Trading is one of the only professions on earth where active, frantic effort is negatively correlated with your income. The harder you physically try, the faster you lose your money. Retail traders are completely brainwashed by the internet to treat trading like an active combat sport. They spend years of their lives backtesting indicators and studying historical data just to find the perfect sniper entry. They become obsessed with the exact millisecond they press the buy button. They believe that clicking buttons is the thing that generates the wealth. They assume that more action equals a higher score. It is a very confident mistake. Pressing a button does not make you money. Pressing a button is just administration. It is paperwork. It simply opens a door. The actual wealth, the millions of dollars generated by elite hedge funds and legendary institutional traders, is generated entirely in the blank, violently boring space between the buy button and the sell button. This brings us to the agonizing tragedy of the messy middle. Let us say you actually do everything right. You do the research. You wait for the perfect setup. You click buy. And miraculously the market agrees with you. The stock goes up. You are a genius. Your screen turns bright green. You have made $50. You feel a warm rush of chemical pleasure in your brain. But then, the market does what the market always does. It stops moving. It drops $10. Then it drops another $5. You stare at the screen. Your chest tightens. You watch your hard-earned $50 profit shrink to $30. You panic. You tell yourself a very convincing lie. You tell yourself that you are being a responsible, disciplined trader who protects their capital. You click sell, lock in a $20 profit, and breathe a massive sigh of relief. You survived the market. You are safe. Then, over the next 3 weeks, that exact same stock goes up 500%. You are left sitting in your chair, holding a $20 bill, watching a complete stranger get rich off your perfectly good idea. You did not lack intelligence. You did not lack the right strategy. You simply lack the stomach to do nothing. To survive in the market, you do not need a high win rate. You need a mathematical edge. You need to risk $100 to make $500. That is the only way the math works over a long period of time. But a massive 5-to-1 profit does not happen in 10 minutes. It takes days. It takes weeks. The asset will move up, violently crash 30%, flatline for a month, and then violently push up again. This is the messy middle. It is awful. It is deliberately designed to hurt your feelings. When you take your profit early just to escape the emotional discomfort of the messy middle, you completely destroy your mathematical edge. You start taking tiny, insignificant wins, and you keep taking your regular, full-sized losses. You slowly bleed your account dry by 1,000 tiny, cowardly cuts. Do not blame yourself for this. You are not weak, and you are not stupid. You are simply a very advanced monkey trapped inside a digital casino. The human brain was never built to trade financial assets. Millions of years of brutal evolution designed your brain to keep you alive in a highly dangerous forest. It is an ancient survival machine. If our caveman ancestors saw a bush full of sweet, high-calorie berries, they did not sit down and wait to see if the berries would double in size by next week. They ate them immediately, aggressively, before a bear or a neighboring tribe could take them away. An immediate, guaranteed reward was the only thing that mattered. If they heard a loud, terrifying rustle in the tall grass, they did not sit tight and wait to see if the trend would reverse. They ran away immediately. Evolution punished patience and highly rewarded immediate, frantic action. Now, bring that exact same ancient caveman brain to a modern brokerage account. When you see a green number on your screen, your brain thinks it has found the berries. It screams at you to eat them. It begs you to click sell. You actually feel physical, nauseating anxiety when you are winning. We naturally assume that amateur traders are scared of losing. The dark, hidden truth is far worse. Traders are utterly terrified of winning. They will happily hold a losing trade for 6 months. They will watch their account drop 40% and do absolutely nothing, hoping and praying the market turns around, because the human brain refuses to admit a failure. But the second they see a tiny profit, they will panic sell in 6 minutes just to get a quick, safe hit of dopamine. Taking a small profit relieves the anxiety of uncertainty. The brain hates the unknown far more than it hates losing. You are fighting your own DNA, and you are fighting a system that knows exactly how your DNA works. Your broker does not want you to do nothing. The entire brokerage industry is built on the illusion of necessary action. They spend billions of dollars designing their applications to look and feel exactly like Las Vegas slot machines. They give you bright flashing lights. They send you aggressive push notifications when a stock moves 1%. They offer you zero commission trades. They make it incredibly easy to swipe your finger and buy a complex derivative contract while you are waiting in line for a coffee. They do this because they do not make money when you sit still. They make money on the spread. They make money routing your orders. They make money on your frantic emotional clicking. If every retail trader in the world bought a good asset and then did absolutely nothing for 5 years, the entire brokerage industry would starve to death. They need you to feel busy. They need you to feel like a day trader. You cannot fight millions of years of evolution and billions of dollars of corporate engineering with pure willpower. Willpower gets tired. Willpower wants a nap. Jesse Livermore understood this 100 years ago. He realized that the only way to survive the market is to acknowledge your own biological weakness. His ultimate rule for generating wealth was simple, brutal, and entirely passive. He stated that it was never his thinking that made the big money. It was always his sitting tight, enduring the boredom, surviving the anxiety of a green screen. So how do modern, profitable traders actually do this in a world designed to force action? They do not possess magical emotional control. They do not meditate until they feel nothing. They simply treat themselves like toddlers who cannot be trusted with sharp objects. They make the act of doing nothing a mechanical, physical rule. If you cannot do this yourself, you outsource the discipline. That is exactly what the alpha equity manager does. You do not need another magical line on your chart. You need an adult in the room. You tell the software your maximum daily loss, say 2%. The second your floating loss hits that number, the software takes over. It closes every single open position, and it completely disables your buy and sell buttons for the rest of the day. You are physically locked out of your own account. And if your panicked caveman brain tries to go into the settings to raise the limit so you can gamble just one more time, it refuses. It snaps the settings back. You cannot negotiate with it, and you cannot cheat your own rules. It even does the math for you, showing your exact dollar risk before you place the trade. It forces you to survive. The link to download it is in the description. Protect yourself from yourself. When a professional enters a trade, they do the necessary paperwork. They set a hard stop-loss to protect themselves from absolute ruin. They set a take-profit limit order to capture the upside. And then, they do the hardest, most unnatural thing in the modern financial world. They close the laptop. They walk away. They go outside. They wash their car. They let the mathematics play out in the dark. They accept a very simple, very freeing truth. Once the order is placed, they have absolutely zero control over the outcome. Staring at a live trade is like aggressively honking your horn while sitting in a deadlocked traffic jam. It makes you feel incredibly busy. It makes you feel like you are doing something important, and it changes absolutely nothing about the reality of the situation. You must kill the urge to micromanage your own money. If you want to finally break the cycle of buying the perfect setup only to sell it for the price of a cheap sandwich right before it makes someone else rich, you have to stop trying to force the market to pay you an hourly wage for your stress. Stop trying to outsmart a global algorithm with your mouse clicks. Do your research, place your bet, set your traps, and then grant yourself the profound, luxurious permission to just walk away. Let the noise happen without you. Let the algorithms hunt each other. Let the amateurs bleed themselves dry trying to catch a 50-cent move. True financial edge does not come from being the fastest person to click a button. It comes from the quiet, slightly arrogant confidence of placing your money in the right room, turning off the lights, and letting the market do the heavy lifting while you sit in a comfortable chair and simply refuse to care.